So to talk more about these changes, we have the team from RAI Auditing, a very prominent tax consulting firm with us today. Before I introduce the team, I'll just walk through today's schedule. It's a 1 hour webinar and we intend to finish by 12 p.m. You can use the chat facility to type in questions and we'll be taking the questions towards the end. And lastly, I would request all of you to please mute yourselves and switch off the videos also. Now I would like to invite James Hill, who heads the RAI firm, the tax team at RAI firm, to take it forward, please. James, over to you.
Thanks, Anu, and welcome everyone. Nishi, are you able to just present the screen, please, so we can bring the slides up?
Yeah.
Perfect, thanks a lot. So as Anu says, obviously there was some drastic changes to the UAE penalty regime over the last few weeks, which took, I think, everyone by a little bit of surprise, because maybe we weren't expecting some announcements. So the purpose of this webinar is to sort of go through the background to the changes, why they took place, what those changes are, and what the impact is likely to be for businesses and taxpayers in the UAE going forward. We'll also give our view on whether we think this is a positive step and what businesses should be doing now that these changes are coming into force in the next month or so. So if you move over to the next slide, Nishi, we'll do a brief introduction of the speakers. So as Annie mentioned, I lead the tax team at RAI. I've been in the UAE since 2016, so about 5 years now. Came over originally to support with VAT implementation with Deloitte, who I was with for around 11 years, and I'll spend the last sort of 8 months at RAI building up the tax team. I've previously presented earlier on in the year with GCC FinTax and wrote a few articles on important topics for them as well. Tom, do you want to introduce yourself?
Yeah, sure. So like James, I joined RAI back in near the end of 2020 in kind of November time. And again, like James, before that, I worked at Deloitte. So I worked at Deloitte in the Middle East since the start of VAT implementation. And before that, I worked at Deloitte in the UK as well. So kind of got about 9 years of tax experience. Also presented at the last webinar we did for GCC FinTax, and I've written several articles for the website as well. And I'll let Nishi introduce herself as well.
Hello, everyone. So I have recently joined RAI as the manager for tax advisory services. And before this, like James and Tom, I came to the UAE for the VAT implementation. Before this, I was a part of the GST implementation in India, and very recently, I've been a part of the economic substance regulations implementation in the UAE. Before coming to RAI, I was working with BDO in India, and then once I moved to for the GCC VAT implementation, it was with BDO UAE.
Thanks, Nishi. Thanks, Tom. So we'll go through the agenda very briefly. So the start of this webinar is going to be all about tax penalty regime, sort of why we have them, how the old regime worked in the UAE and the problems that it carried with it, and then how the new changes potentially sort of rectify some of those problems that businesses were facing. We've also got some illustrative examples to show how the new penalty regime will work in comparison to errors and mistakes made under the old regime, all which is very positive. We'll also go through some of the outstanding questions that are still around following the introduction of the new legislation, because there are some gaps where we know that many businesses are still uncertain about how to approach certain things. So we'll go over some of those And as Anu said, happy to then answer some questions to the best of our ability at the end of the session. Feel free to type those in the chat box, and we'll go through them right at the end to see whether we can resolve some of the outstanding issues that people have. Okay, next slide, Nishi. So I thought it was good just to start the webinar to put into a bit of context the purpose of a penalty regime for tax legislation. The obvious one really is to try and make sure that businesses and taxpayers actually abide by the law. So, you know, you have to have a penalty regime. You go to any country in the world and they will have a certain penalty regime for their tax legislation, whether that's indirect taxes, personal taxes, or corporate taxes. Now, obviously in the UAE, we're primarily focused on indirect taxes. So the penalty regime has mainly been applicable to VAT and excise tax. But obviously, if we introduce corporate tax in the future, I'm sure there will be some sort of penalty regime for that as well. So the main reason is to try and make sure that everyone abides by the tax laws. In terms of a stick versus carrot approach, now obviously where there is huge tax fraud, and we do see in places like Europe, you know, they sort of say the overall tax loss due to fraud is in the billions of euros a year. So it is a big issue. And one of the ways of trying to deter that from happening is having quite harsh penalties. So where you have issues such as fraud, which are criminal in nature, it's very common to see that that would result in not only a large financial penalty, but also a prison sentence sometimes. You know, usually can be quite harsh. And the purpose of this is obviously to try and discourage anyone from even thinking about undertaking fraudulent activities. And I don't think anyone from a policy perspective or from a sort of tax advisory perspective really disagrees with that approach from the tax authorities. You know, tax fraud is a really big issue globally. It really impacts countries and how they can support their citizens. So having a really sort of tough penalty regime for fraud, I think, makes sense. Then you have the other sort of errors that arise that are not fraudulent in nature, and you know, tax is complicated. There are lots of grey areas in the legislation. Taxpayers can take one view and tax authorities may take another view. And particularly as time goes on and taxation and products and services evolve, it can be quite complicated. So many countries will use the penalty regime to try and affect taxpayer behaviour. Now, there are a number of constraints that tax authorities have. So they're under pressure globally in terms of resources and their budgets. And you'll see many tax authorities across the world probably don't have enough auditors. Perfect, thanks a lot. So as Anu says, obviously there was some drastic changes to the UAE penalty regime over the last few weeks, which took, I think, everyone by a little bit of surprise, because maybe we weren't expecting some announcements. So the purpose of this webinar is to sort of go through the background to the changes, why they took place, what those changes are, and what the impact is likely to be for businesses and taxpayers in the UAE going forward. We'll also give our view on whether we think this is a positive step and what businesses should be doing now that these changes are coming into force in the next month or so. So if you move over to the next slide, Nishi, we'll do a brief introduction of the speakers. So as Anu mentioned, I lead the tax team at RAI. I've been in the UAE since 2016, so about 5 years now. Came over originally to support with VAT implementation with Deloitte, who I was with for around 11 years. And I spent the last sort of 8 months at RAI building up the tax team. I've previously presented earlier on in the year with GCC FinTax and wrote a few articles on important topics for them as well. Tom, do you want to introduce yourself?
Yeah, sure. So, like James, I joined RAI back in near the end of 2020 in kind of November time. And again, like James, before that, I worked at Deloitte. So I worked at Deloitte in the Middle East since the start of VAT implementation. And before that, I worked at Deloitte in the UK as well. So kind of got about 9 years of tax experience. Also presented at the last webinar we did for GCT FinTax, and I've written several articles for the website as well. And I'll let Nishi introduce herself as well.
Hello, everyone. So I have recently joined RAI as the manager for tax advisory services. And before this, like James and Tom, I came to the UAE for the VAT implementation. Before this, I was a part of the GST implementation in India, and very recently, I've been a part of the economic substance regulations implementation in the UAE. Before coming to RAI, I was working with video in India, and then once I moved to for the GCC VAT implementation, it was with video UAE.
Thanks, Nishi. Thanks, Tom. So we'll go through the agenda very briefly. So the start of this webinar is going to be all about tax penalty regime, sort of why we have them, how the old regime worked in the UAE and the problems that it carried with it, and then how the new changes potentially sort of rectify some of those problems that businesses were facing. We've also got some illustrative examples to show how the new penalty regime will work in comparison to errors and mistakes made under the old regime, all which is very positive. We'll also go through some of the outstanding questions that are still around following the introduction of the new legislation, because there are some gaps where we know that many businesses are still uncertain about how to approach certain things. So we'll go over some of those. And as Anu said, happy to then answer some questions to the best of our ability at the end of the session. Feel free to type those in the chat box, and we'll go through them right at the end to see whether we can resolve some of the outstanding issues that people have. Okay, next slide, Nishi. So I thought it was good just to start the webinar to put into a bit of context the purpose of a penalty regime for tax legislation. The obvious one really is to try and make sure that businesses and taxpayers actually abide by the law. So, you know, you have to have a penalty regime. You go to any country in the world and they will have a certain penalty regime for their tax legislation, whether that's indirect taxes, personal taxes, or corporate taxes. Now, obviously in the UAE, we're primarily focused on indirect taxes. So the penalty regime has mainly been applicable to VAT and excise tax. But obviously, if we introduce corporate tax in the future, I'm sure there will be some sort of penalty regime for that as well. So the main reason is to try and make sure that everyone abides by the tax laws. In terms of a stick versus carrot approach, now obviously where there is huge tax fraud, and we do see in places like Europe, they sort of say the overall tax loss due to fraud is in the billions of euros a year. So it is a big issue. And one of the ways of trying to deter that from happening is having quite harsh penalties. So where you have issues such as fraud, which are criminal in nature, it's very common to see that that would result in not only a large financial penalty, but also a prison sentence sometimes. Usually can be quite harsh. And the purpose of this is obviously to try and discourage anyone from even thinking about undertaking fraudulent activities. And I don't think anyone from a policy perspective or from a sort of tax advisory perspective really disagrees with that approach from the tax authorities. You know, tax fraud is a really big issue globally. It really impacts countries and how they can support their citizens. So having a really sort of tough penalty regime for fraud, I think, makes sense. Then you have the other sort of errors that arise that are not fraudulent in nature, and tax is complicated. There are lots of grey areas in the legislation. Taxpayers can take one view and tax authorities may take another view. And particularly as time goes on and taxation and products and services evolve, it can be quite complicated. So many countries will use the penalty regime to try and affect taxpayer behaviour. Now, there are a number of constraints that tax authorities have. So they're under pressure globally in terms of resources and their budgets. And you'll see many tax authorities across the world probably don't have enough auditors to go out and maintain a huge presence on site at different businesses, ensuring that they're completely compliant. So they require businesses to do their own self-review and self-assessment, and also make amendments where they find errors. So what you can see is penalty regimes adapted and implemented to try and encourage that sort of behaviour. So if you have particularly tough penalties and large fines for errors, then it sort of makes sense from a policy perspective to give some concessions and easements where businesses voluntarily identify and disclose those errors to the tax authority, because it increases the overall revenue of the tax authority, and it can everyone to make sure they go on mute, please? If everyone could just turn on mute whilst I'm presenting, that would be really helpful. Thanks very much. So the penalty regime can be used to encourage taxpayers to submit voluntary disclosures, which helps the tax authority in terms of collecting its own revenue and its own resources. So it doesn't have to send out lots of auditors all the time to businesses to make sure that all these errors are identified. Another area, like a good example, is around changing tax behaviour. I thought I would just mention as a good case study is around where certain issues are identified by the tax authority, trying to resolve those issues by using penalties to manipulate taxpayer behaviour. So a really good example was in the UK in the early 2000s. There was a sort of low fixed penalty for failure to submit a tax return in time or make the payment in time. So a bit like what we've seen with the UAE tax regime now. And what they found in the early 2000s is that businesses just weren't focusing on getting their VAT returns in on time. So throughout the organisation, there wasn't as much pressure or responsibilities put on the finance team or tax team to make sure those payments were made and tax returns submitted on time. And the failure rate was extremely high. Now, obviously, the tax authority didn't like this. So what they did is they changed the tax penalty regime from being a low fixed penalty to a percentage-based penalty based on the net payment due on the VAT return. So the first error was a free pass, so there was no penalty. But then if you failed to submit your next VAT return in time, I think the penalty went up to sort of 2% of the VAT at stake. And for some businesses, 2% of their net payable is obviously a very large amount. Now, taxpayers, didn't like this, and they did go to court. And there were several high-profile cases in the UK around this, but it did sort of have a big impact on how many tax returns were submitted on time. And so, although taxpayers didn't like it, it did change the behaviour. I think the sort of increase of on-time filing sort of went up in the next few years to around sort of 80% increase. So it's had a huge impact. And I think there's a really good example around how the changes in penalties can really alter taxpayer behaviour. Now, what Tom is going to come on to in the next slide is around how the old tax penalty regime, as we'll call it, sort of had a unforeseen, I guess, taxpayer behaviour, because potentially the amounts of penalties for innocuous errors and voluntary disclosures were just too high. So this is potentially one of the reasons why the UAE has decided to amend its tax penalty regime, because it wants to amend taxpayer behaviour. So Tom will walk through that now. So over to you, Tom.
Thanks, James. So exactly as James was saying, I mean, there's a very, very big corpus of penalties in the UAE. There's a variety of penalties. A lot of them are fixed penalties, like James was saying about the earlier kind of UK ones in the early 2000s. In a lot of cases, it's sensible for those to be fixed penalties. So if you have kind of bad documentation or things like that. But there was a couple of penalties under the old penalty regime that were causing extreme issues for business, and all of us, all advisors, had many conversations with clients about these penalties, and they caused a huge amount of problems. So of all the penalties in the legislation, most of them never caused much of an issue. The ones that did cause an issue were the ones on the left-hand side of this slide. So if we ignore the top one for now and actually just look at the bottom one, so errors in VAT returns or submission of voluntary disclosures. So the first penalty was a fixed penalty of up to 5,000 dirhams. So it would be 3,000 for the first one and then 5,000. And like James says, that is pretty much what the UK had at the kind of early kind of 2000s, a fixed penalty. Every time you make an error, every time you submit a voluntary disclosure, you have to pay that penalty. Now, one of the problems with this is it's obviously a fixed amount, it's 5,000 dirhams. If you have a smaller error, you don't want to disclose that, because if it's below 5,000 dirhams, you have a massive penalty. So the other penalty that also applies to voluntary disclosures was the kind of staggered percentage penalty. This also applied to errors in VAT returns. And this is what James was saying the UK introduced, and many tax authorities around the world have a very similar scheme, where if you find an error and disclose it, you have a very low penalty of 5%. If you're notified of an audit by the tax authority and then you disclose it, you have a kind of medium penalty, because it looks like you weren't going to disclose it if you weren't subject to an audit. And then if a tax authority finds errors during an audit, you have a very high penalty of 50% of the tax error. Now, this is quite a good design for a system, because it encourages taxpayers to notify the FTA or another tax authority of errors before the tax authority visits them. So like James was saying, the tax authority and the FTA included are limited on the number of staff they can hire. They're limited on the number of audits they can conduct. So this kind of penalty would encourage taxpayers to correct errors, because they would get the lower 5% penalty. So that bit was broadly fine. The problem is the top part of this slide that we've come across many times, and I imagine a lot of people listening will have come across in their own businesses, that in addition to these penalties, the kind of fixed penalties and percentage penalties, there was a late payment penalty that was also being applied when people were submitting voluntary disclosures. And it was calculated on a kind of 2% of the tax due immediately, 4% after a week. And then the bit that was really causing a problem was after a month, every single day, 1% of the penalties, 1% of the tax amount increased as a penalty, up to 300% maximum. So one of the problems this created, which I'll kind of go on to later in a little bit more detail, is so many businesses had penalties that had basically maxed out at 300%. And so the bottom part of this slide, where we've got the 50%, 30%, 5%, was completely irrelevant, because everyone was at 300% already. So the late payment penalty caused a lot of issues in overtaking all the other penalties and being far and away the most important one to think about. Also wasn't helped by the FTA being very aggressive with how they pursued these penalties, and they would apply them to voluntary disclosures. There was a thought maybe about a year ago, advisors were discussing whether these should actually be applied to voluntary disclosures, but a case on this went up through the court system, but ultimately the Supreme Court decided that yes, these penalties were applicable on voluntary disclosures, which clearly discourage taxpayers from disclosing the errors. So those are the two we saw the most of. There are lots of other penalties on the right-hand side of this slide. So kind of delays in VAT return submission, late registration, late deregistration, incorrect invoices. The penalties for these are a lot smaller, but these are some of the more frequent ones we see. So as kind of finance tax team members, the penalties on this page are the ones that I would recommend you kind of focus on, because as advisors, these are the ones that we see the most, and we see businesses getting these ones incorrect more frequently. So we've kind of talked briefly about the issues of the old penalty regime, but I'll go into more detail on the next slide. If you could change it, wonderful. So on the left-hand side, we've talked about this. The late payment penalty of kind of 1% a day up to 300% is extremely high when you're paying 3 times the tax value. This again went to the Supreme Court for a different case, which was, let's imagine we make an error in January 2018, but we don't notice that error until January 2020. And we disclose the error in January 2020, but by then, way more than 300 days have gone by since the original error. So the FTA was arguing that that should be a 300% penalty because of the late payment penalty of 1% a day. The taxpayer in this case was arguing that no, the late payment penalty should apply from the date of the voluntary disclosure, so in 2020. Supreme Court agreed with the FTA again in this case, which meant that any voluntary disclosures submitted, the penalties calculable on that would be from the date of the original VAT return submission. So basically, if you have an error in a VAT return that's more than kind of roughly 300 days old, the penalties will be 300% regardless of whether you disclose it or not. If the FTA find it in an audit, the penalties will be 300%. If you disclose it, the penalties will be 300%. So obviously, the problem that this created is on the top right-hand side of this slide, is it doesn't incentivize taxpayers to comply with the law. So if we think right back to the start, what James was saying, there are kind of two broad functions of a penalty regime. One of them is to discourage kind of deliberate errors or have a punitive system that charges very high penalties to encourage compliance that way. But the other side, the kind of carrot, is to allow mitigation, so to encourage taxpayers to disclose errors and to have lower penalties when they do. The problem the late payment penalty had in particular was that it basically discouraged businesses from ever submitting voluntary disclosures past a certain point because they were guaranteed to have high penalties and there was no mitigation. So a lot of businesses could have taken the position that we would rather risk the possibility of the FTA finding these penalties, finding these errors and charging us 300% penalties, rather than disclosing the error and definitely getting 300% penalties. So it created it created the wrong incentives in the system because of the way the law was being applied. Then the final problem was that despite these penalties being really high, the cost of actually challenging them in court and going through the tax dispute resolution committee and then up through the kind of 3 levels of appeal was very expensive. And so businesses found it very challenging to actually appeal these penalties because the cost of doing it at the time it took was just far too much. So that kind of gave an additional benefit to the FTA that they would basically win everything by default because businesses couldn't appeal them. So again, this discouraged businesses from actually looking at their past tax returns and correcting any errors. So it didn't. The only objectives of a really good tax penalty regime that it met was compensating the government and having very high penalties where people have made errors, but it didn't really promote compliance particularly, and it didn't really incentivize disclosure where accidental mistakes had been made. So advisors had been saying this for quite a while, and I think there was a general acceptance in the FTA and among advisors that there were things in the regime that could do with being changed, especially following Supreme Court decisions. And I think now Nishi is going to tell us about some of the things that were changed to address some of these issues.
Yeah, thanks, Tom. So as we previously discussed about the old penalty regime and the approach that was being followed, with the new tax penalty regime being introduced, it definitely leads us to think that finally the authorities were open to actually hearing out the concerns of the taxpayers, because with such huge penalty, it could become excruciatingly impossible actually to wait and actually think of a situation where businesses made some genuinely innocent errors and they wanted to rectify them by voluntarily coming forth. So it was that balance was not there, where you can basically incentivize them for having a bona fide intention in coming forth and voluntarily rectifying it. So with that in mind, let's look at the changes that have been introduced to the tax penalty regime. So the old penalty regime was revamped by the new one by way of a cabinet decision number 49. This was released on 28th of April this year. The effective date is 60 days as of 28th of April. So that comes up to 28th of June. Now, the key changes around this was, of course, the infamous late payment penalty. If you look at, as we previously discussed about the Supreme Court decision, where the approach of the FTA was upheld to say that it was the original tax return due date that would be taken into consideration while computing this penalty, that has been now changed, and the payment will now, the late payment penalty will now be treated as late only following 20 business days from the VD submission or receipt of a tax assessment. Now, you can only imagine how significantly it will reduce it has reduced the impact, wherein the penalty would get escalated from because of the daily 1% penalty, and that would automatically just shot up to 300% if you have there has been a considerable time lag in between the rectification and when you discovered that error. So that has also been changed. So now with that 1% per day penalty, we can now see that there is a change in terms of that variable penalty. So it is now coming down to 4% per month. So this will now begin from 1 month, as opposed to the 1 week rule that we had in the old regime. Now, the VD penalty changes are that it comes in the form of the staggered penalty. So it is more of a time-bound penalty where the penalty amounts will vary based on the time difference between the error when it was discovered versus when the VD is being submitted. So as opposed to the earlier approach where the penalties were fixed, now we have that considerable time frame, which is, in my opinion, it's pretty reasonable for businesses to actually take into account what all issues or the errors have been discovered and actually take action to rectify them. So the range is from 5% up to 40%. So 5% is when you are able to do the submission of VD within 1 year of your of discovering that error, and it will gradually increase to 10% if you're doing it within 2 years, moving on to 20, then 30, and then 40 if you're doing it within 4 years. But please bear in mind that the staggered penalty is something which is coming with an objective to actually incentivize the taxpayers to take prompt action to rectify the errors, rather than just sitting back and waiting for it to accumulate and then taking some action. Now, the risk over there is that you may just end up facing tax assessment during the interim time when you want to wait. And if that happens, then there is a higher penalty of 50%. In the next couple of slides, we'll see how it will actually round up. So the other changes that we are looking at in the new penalty regime is around the tax amnesty scheme. So again, this scheme is nothing new in the global tax system. It has always been there. In fact, we've seen that in a neighboring GCC country like KSA, where they did introduce a particular waiver. I think it was long due that UAE would also adopt one. So of course, the new penalty regime comes with sigh of relief in that respect, because it is now giving opportunity for the taxpayers to start afresh, to settle their old liabilities if you're meeting the conditions that has been prescribed under this section. So basically, you are looking at a waiver of 30% of the total unpaid penalties, provided you meet the conditions, which are that the penalties are applied under the old penalty regime. All the due taxes have been settled by end of this year, and 30% of the total administrative penalties which are due and unpaid by the effective date, which is 28th of June, should be paid by the end of this year. If you're meeting all these conditions, then you will be eligible to avail the tax amnesty from the FTA. And this, I'm sure, will significantly reduce the burden, which was otherwise there was absolutely no avenue for the taxpayers to approach to the authority requesting for a waiver. And but now that we have this kind of a scheme, it gives you an avenue to actually rectify the errors and also get the financial benefit out of it. Now, we have some other routine penalties, which we also mentioned under the old penalty regime. These penalties have also been reduced to an extent. So if there is a late registration penalty, originally it was the penalty was around 20,000 dirhams. It has now been reduced to 10,000 dirhams. Similarly, late deregistration used to attract 10,000 dirhams worth penalty. Now it is more of a reduced version where we have a 1,000 dirhams per month penalty leading up to 10,000. And then we have the submittal of incorrect tax return, where the range earlier was between 3,000 to 5,000 dirhams, depending on whether it was your first time or whether it was a repetition. So that range has also been reduced to 1,000 to 2,000 dirhams. And of course, there are no penalties if a tax return is being corrected before the due date. So now we are going to look at through some practical examples, which will actually give you a glimpse of how these new changes would actually impact the businesses in practice. I will now hand over to Tom to take us through these illustrations.
Great, thanks, Nishi. So this slide is an example of a penalty incurred under the old regime and a penalty incurred under the new regime for a voluntary disclosure. So we have a company that makes an error of 500,000 dirhams net in January 2018, which means they've underreported output tax of 25,000. So they went for a couple of years and finally discovered this error in January 2021 and realized they'd underpaid this 25,000. So with their advisors, they submitted a voluntary disclosure to kind of correct the error. Now, if that was submitted under the old regime, which in January 2021 it would have been, these are the penalties you would get. So if this was the first voluntary disclosure that had been submitted, you would get a fixed penalty of 3,000. If it was the second or the third or the fourth, it would be 5,000. The variable penalties are the ones I talked about at the start, which were 5% of the tax value if you notify the FTA yourself, 30% if they give you notification that they're going to do an audit, or 50% if they've done the audit and the FTA finds it during the audit. Now, because we disclosed it ourselves, we get a very low penalty of 1,250, which is, as I was saying earlier, a good point in the old system. It encourages compliance. Now, the bottom one, everyone will be able to see, is clearly the big problem, because this is the late payment penalty applying from 1% a day. And because because January 2018 was so long ago compared to January 2021, the late payment penalty is huge and way more than the kind of incentive penalty of 1,250 dirhams. So the total penalty in this case ends up being over 80,000 for a relatively small error of 25,000. So if you're the business that found this error in January 2021, and you look at this and you say, well, okay, I'm being charged 76,500, sorry, I'm being charged 80,000 already for this error. The late payment penalty has already hit 100%. What if I just don't disclose it and I wait and see what happens? Then if the FTA did audit them in the future, the variable penalty would be 50%, so it would increase to kind of 12,500 because the FTA had audited them. But even so, even if that was 12,500, it's still a tiny amount compared to the overall penalty. So this business in the example would not have been incentivized to correct this error. The incentive is the alternative to not correct the error beyond a certain point. Clearly, that is problematic. So what the new regime does is the fixed penalties have been reduced. I think, as Nishi said on the previous slide, the fixed penalties have been reduced to, I believe it's 1,000 for the first error and then 2,000 for any other disclosures submitted after that. Now, the variable penalties on this one have increased because this disclosure was submitted in January 2021. So it's been 3 years since the original error. So if we remember back to the previous slide, the new staggered disclosure penalty is kind of 5% within the first year, 10% within the second year, 20, et cetera, So the longer you delay before submitting a disclosure, the higher that penalty will become. So this is now an even better kind of incentive to disclose. So that 7,500 dirham penalty, if this business had found the error in 2018 and disclosed it, that penalty would be 1,250. So it'd be much lower. So it encourages disclosure early on. And then, assuming the liability was settled within 20 days of submitting the disclosure, there are no late payment penalties at all. So broadly, there are very few situations in which a business should now be incurring these late payment penalties, because if you submit a voluntary disclosure, pay the tax within 20 days. If you're audited by the FTA, pay the tax within 20 days. And you will not, and you avoid this late payment penalty completely. So what this does now is it makes the middle box, the variable penalty, the main thing that you want to think about. So the main thing you're thinking about under the new regime is how early you disclose the error, because that is the thing that has the biggest impact on the overall penalty applied. And obviously the overall penalties are reduced significantly. But that is the key thing to remember now, that the earlier we do this, the better. So it properly incentivizes businesses to look for errors and to have robust processes and to correct them early on. Because if the FTA came out and found the error in future, like I said previously, that penalty would be 12,500. So it becomes significantly more than what it would be if you disclose it yourself in the first year. So like 10 times as much, obviously. Whereas if we disclose that error within a year, then our penalty we're paying would be about 2,000 dirhams. It's nothing comparatively. So that's how the new regime works. So as long as you pay the tax within 20 business days, or 20 days, sorry, of the disclosure, brilliant. You have a much lower penalty, assuming you've done it earlier on. And in all cases now, pretty much under the new penalty regime, you are incentivized to submit early and pay as soon as possible. And there shouldn't be a case where a business has a liability, has an error, and is incentivized not to disclose it. I think in 99.999% of cases now, it will always be more beneficial for a business to find the error and disclose it rather than kind of try and hide it, which is brilliant. So the next slide is covering how the amnesty scheme works that Nishi covered briefly before. So this doesn't apply to new penalties. This applies to old penalties that have been charged and not paid yet. So it won't apply to anything submitted under the new scheme. It only applies to the old scheme, but it only applies to penalties that haven't been paid yet, because although you can't go back to January 2018 and say we incurred a penalty back then, we want an amnesty. Realistically, the FTA aren't going to repay all these penalties. So a very similar example, we have a company that makes an error of 500,000 dirhams net in January 2018, again underreported output tax of 25,000. In this case, they discover the error a little bit later in April 2021, following a kind of health check review. Again, the error exceeds 10,000 dirhams, so we need to submit a voluntary disclosure. So because this error was discovered before the business knew anything about the new regime, they submitted a voluntary disclosure. The penalties were, as in the last one, 80,750, calculated in exactly the same way. But then the tax amnesty scheme was announced. The business hadn't yet paid these penalties and tax. They were waiting to kind of have a discussion with the FTA about it. So they now benefit from this kind of 70% reduction in the penalties. So if the business is eligible for the amnesty scheme, the penalties would be reduced significantly and they would only have to pay 30%. Now, the new regime is obviously going to be better. So even with a reduction of 30%, in nearly every case, the new regime will have a lower penalty. I imagine there are some strange edge cases where the tax amnesty scheme would be better than the new regime, but broadly it's not going to be, I don't think. It's exactly the same error, but if you apply for the scheme, you get a significant reduction. And I think this amnesty is, like every amnesty, like the one in the KSA and everywhere else globally, it's again to encourage people to settle liabilities. It's to encourage people to say, right, we're starting clean now. We're going to settle all our old liabilities. We're going to wipe the slate clean and start again from this date. And that's the encouragement. The FTA is kind of saying, we would rather have 30% of something than 100% of nothing, where a business is arguing. And this will hopefully encourage businesses not to have to go through the court system, like I was mentioning earlier. If you have an outstanding penalty, previously, if it was so large, you might want to be going through the court system to challenge it, and this will make that less likely. So it frees up court time, it frees up FTA time, it frees up business time. It's very, very positive. There are some conditions on being able to avail yourself of the waiver. They are that the penalties were imposed before the effective date of the new legislation, which is the 27th of June, I think. So they have to have been charged by the FTA before then and not paid. So if they've been paid, the FTA isn't going to give a retrospective waiver, we don't think. And then if you are eligible for the waiver, you have to pay the tax and the 30% penalties by latest 31st of December 2021. So if you haven't paid the 30%, so if this business, for example, hadn't paid the 24,225 dirhams and the 25,000 dirhams of tax by the end of this year, they wouldn't be eligible for the amnesty scheme and they would have to pay the total penalty of 80,000. But I would hope that December 2021 gives people enough time to make the most of this scheme. And the reason I think that it has a kind of time limit on it like that is to just try and get this new regime embedded by the end of this year, and to close off the old scheme, get rid of it, have no real outstanding problems for businesses or the FTA under the old scheme by the end of the year. And then in 2022, we have a really, really good system. It encourages taxpayers to kind of do retrospective reviews and correct errors, and without having this kind of hangover of the old regime pushing on into several years' time. So these are two examples of how how the new regime compares to the old regime and how the amnesty compares to the old regime. I think Nishi is now going to give us a quick look at, to emphasize the point that I was making earlier about the improvements to the voluntary disclosure penalty and how beneficial it is to actually disclose errors early and to kind of look for errors early and be really mindful of your kind of compliance position. And she will just give a similar example on the next slide of how that new system works.
Thanks, Tom. So yeah, now we are going to shed some light on how this exact example is going to really look if we are looking at the staggering penalty. We shouldn't lose sight of the fact that the new penalty regime, of course, is very encouraging, and we can see that there is a great balance in terms of the encouragement for the taxpayers to come forward and rectify any errors that have been discovered. And of course, all these penalties, the fundamental premise remains the same, which is that all the taxpayers should be complying with the regulations. Now, at the same time, the fact that the new penalty regime comes with these kind of positive developments, it also requires the taxpayers to be very prudent in their approach when they discover an error. It does not mean that there is a certain time frame that you get sort of a leeway to just wait and make those kind of rectifications only at a later point in time, because you will see that there will be a gradual increase in the penalty, and it can shot up to 40%. So if we take that same example, we have a company which couldn't disclose the standard rated supplies, which was made back in January of 2020, and the underreported tax is, of course, more than 10,000, so it's around 25,000. And in order to make that rectification of the omission that was done, the company will now be required to file the voluntary disclosure. The question over here is around the fact that how swiftly the company should act in this case. What is the impact of delaying correction of the error for this voluntary disclosure? Now, we all know that the fixed penalty is already reduced. So considering that this was the first time that the error was, the VD is being submitted, so there would be a fixed penalty of 1,000 dirhams. When we look at the staggered penalty, and of course, this is contingent upon the fact when the error was discovered versus when the VD is going to be submitted. So if this is submitted within 5 years, you just make a lesser payment of the penalty, because it will only attract 5% of the administrative penalty. And it will gradually increase. If you move on to the next 2 years, if you're able to do the voluntary disclosure within 2 years, there is a bump of additional 5%. So it increases by 10%, and so on and so forth. If you still don't take any action within 4 years, you will see that the penalty has already skyrocketed to 40%. And let's not forget, during this interim time, if the FTA knocks at your door for the tax audit, then there is a higher 50% penalty that would be applicable. So the key over here is that the moment a taxpayer finds out that there is some error, the prudent approach is to look for the options to rectify it immediately, to explore all the options, whether they want to do the voluntary disclosure and then ask for a reconsideration and whatnot. But the key thing that remains is to act swiftly rather than delaying this correction, because you will be oscillating between uncertainties. One is, since you don't have a stipulated time frame of when you're going to do the voluntary disclosure, it will gradually increase. The percentage is going to increase that way. And on the other hand, we have the FTA audit. Of course, if it comes up during that time, then you will not be able to benefit from the reduced tax percentages on the penalty. It will shot up to 50%. So this was the whole aim for us to just inform you about how the new penalty regime will actually pan out. in practice. Having said that, now we have also seen the comparative analysis between the two regimes. We will now move on to the next slide, which talks about some of the open questions which are pending clarification. I'm sure that these are the questions which have come to our minds more often, and we've already, probably we already know a few of the answers based on our interpretation, but it's something that we actually would wait for the FTA to clarify, because we now need to know how all of this is going to actually pan out in practice. So few of the questions are here. One of them is, what happens if the FTA does not approve the VD within 20 business days? So we've seen that the late payment penalty is now considered to be late only following 20 days from the time when the VD is submitted. But what happens when during that stipulated time the FTA does not approve the VD? What happens then? Similarly, if a VD is submitted to rectify an error before the due date of return, would the associated penalties around the VD submission be imposed? So for example, you have taken a cutoff date of 24th of the month to file your VAT return. You've done that, and you have 4 days additionally to just look through anything which is missed out from getting disclosed or settling the payment. And then you figure out around 26th of the month that there was indeed a couple of supplies that couldn't be included in the submission, and of course the associated output tax is exceeding 10,000. In that case, you are able to rectify or rather revise that tax return by way of filing voluntary disclosure. There's no other way around it, right? But because you are submitting the voluntary disclosure before 28th of the month, in that case, the question is whether the penalties around the VD submission would still be imposed. Another one is, what happens to all the voluntary disclosures made between the transition time, which means between the date of the cabinet decision up till the effective date. So we're looking at the 28th of April and leading up to the effective date, which is 28th of June. So what happens during that interim time for the disclosures that are voluntarily being made during that time? And of course, regarding the amnesty scheme, the FTA will, I'm sure, come up with the procedures, how to avail it and how it would be executed in real time. But the other interesting question is, for the penalties that have already been settled in full, will the tax amnesty scheme still apply to those taxpayers? Because in all likelihood, all the conditions would have already been met. So is that something that will be open for such taxpayers? And of course, we are looking at other scenarios as well around the fact that the penalties are imposed because the registrant failed to calculate the tax on behalf of another person. So it would be interesting to see what are the real-time examples. How would this penalty section actually crystallize in real-time experiences? So it would be interesting to see what are the situations under which this would be applied. And the other one, the last one, is around the position for penalties which have already been contested for reconsideration at the TDRC or court level. So what happens to those kind of penalties now that we have a new penalty regime, which is more encouraging, which is indeed having a huge positive impact on all the taxpayers. And of course, it has a right balance of encouraging the taxpayers to comply as much as possible with the tax obligations, and also having a retributive theory of penalty behind the policy, the underlying policy for this regime. So we do expect the FTA to hold a webinar for tax agents to explain all of these changes. And of course, I'm sure there would be further guidance in due course around the penalty waiver scheme. So we will now move on to explain, or rather shed some light on our view of what we think about these changes with the advent of the new tax penalty regime. So I'll hand over to James to take us through that.
Thanks, Nishi. So I'm conscious of time, and I know there have been some questions popping up in the chat box, so I'll keep this relatively brief so we can finish on time. So I think you probably got from the gist of our presentation that we are sort of in favour with the approach that the Tax Authority and the Ministry of Finance has taken in respect of amending the old penalty regime. I think, you know, overall there can always be improvements in discussions and consultation between the Tax Authority and taxpayers, but this does demonstrate that they did sort of listen to concerns. Like, that may have been indirectly rather than holding public consultations, but having one at the Supreme Court, you know, I personally was quite surprised they did make these amendments so quickly. There was no compulsion for them to do so, but I do think it fits into the wider narrative that the UAE wants to try and encourage investment into the country. And if you look at the other steps they're taking in terms of ownership, rules for foreign owners and foreign businesses in the mainland, what they're doing around regulation to make sure that they meet various sort of European or OECD targets around taxation and reporting, they are trying to become a more favourable place to do business. And I think that, you know, the tax penalty regime is not the be all and end all, but it certainly plays a factor when businesses are considering where to open up new operations. So from that perspective, it's very welcome. I'd be really interested if the tax authority were to do some sort of analysis, maybe say after a year following the introduction of the new regime, just to see, you know, has there been a large increase in voluntary disclosures, reduction in cases being taken to the TDRC or court, and maybe an overall increase in tax revenue, because from a theoretical perspective, this is what we are expecting. So it'd be really, really good to see some data on that. I don't know whether they would release that sort of data, but it certainly would be interesting. So overall, we firmly believe, like a lot of businesses and taxpayers, this is a positive step, and hopefully it will lead to a more harmonious sort of relationship between the tax authority and businesses going forward. Just to finish, and if you go on to the final slide before we look at some of the questions, just to finish on what this means for taxpayers. Now, well, obviously there's some immediate steps for certain businesses that have penalties outstanding that have been issued under the old regime. You should look to make use of the penalty waiver mechanism. Now, the only thing that might potentially stand in the way is, you know, if you still want to contest the underlying tax treatment at stake that has raised the penalties, do you forfeit and forego your right to do that if you use the penalty waiver scheme? We have to wait, and this is one of the things that will be raised with the FTA. But assuming that, you know, you accept that an error has been made and all you want to do is minimise the penalty burden, then make most of that waiver scheme as soon as the right procedures come out. And then clearly going forward, there is a much higher financial incentive to do reviews proactively on an annual basis, and encourage people with that responsibility through the forms of KPIs and reporting progress of their jobs to make sure that happens. It really puts an onus on businesses to take that responsibility themselves, because ultimately, you know, it makes a difference between a 5% penalty and a 50% penalty, which, even though the VAT rate is still only 5%, for some businesses, given the size of transactions, that could be quite a large saving. So that's certainly something that businesses need to think about on an ongoing basis. So with that, and with a sort of few minutes left, I'm going to open up the chat box now, and I'll start at the top and go through as many as I can. You have to, I guess, bear with us in that, you know, the FTA hasn't released that additional guidance. They haven't actually had that one-to-one discussion with tax agents yet. So we're hopeful that in the next few weeks, some of these questions will be more definitively answered, but let's see what we can address now. Yes, the procedures for applying for this regime have not been released yet. Hopefully they'll be straightforward, and everything will be simply to do on the online portal with respect to making payments. Obviously, one of the challenges is if you have ongoing tax returns, it's about making sure that the payment for the penalties, the 30% payment that you're going to make, is allocated to the correctly outstanding amount. Sometimes we know there have been issues with the way that the FTA allocate payments to a certain VAT.
James, thank you so much for the nice presentation, James. It was very, very insightful.